38, busy accountant. His wife, 45, is a housewife, and their son is 15. As part of his commitment to protect his family, Alan decided on a comprehensive life, medical, and critical illness plan and topped it with AIA Vitality and Medics. We call it our total health solution, enabling families like Alan's and yours to live well, protect well, and get well. With his AIA Vitality member discount, Alan bought a fitness tracker, took regular health screenings, and reduced his weight by joining the Whole Musk Nutrition Program. Alan's healthy choices gained him annual credit value to his health wallet. AIA Vitality's partnership discounts make it easy for Alan to make healthy lifestyle choices. He easily reaches gold status annually and gains even more benefits. Despite all of his healthy efforts, Alan suffered a heart attack. His medical and critical illness plans covered his hospitalization and treatment, including alternative medical care and follow-up consultations. Medics tapped into their international network of specialists to provide him medical advice. Alan's operation went smoothly, and he experienced less pain after surgery. The Medics' dedicated personal medical case management team continually monitor Alan's recovery, providing him both support and peace of mind. Thanks to AIA Vitality, Alan continues to live healthier, longer, and better.
Hello everybody, welcome. How's everybody doing? I hope everybody have taken your dinner already. Kingdom Coffee Talk, right, is happening every Wednesday, 8:30, right? So every single week we talk about different things. Every Wednesday we will choose a topic that is relevant to everybody, right? That is relevant to everybody. Sometimes we will have external guests that will come in and we will do some interviews with them. This week is a little bit different. This week is just me. There's nobody else in the Coffee Talk together with me. There's just me. Okay, I'm going to do a live sharing today on building a strong financial portfolio. What is a strong financial portfolio? And I'm not going to tell you how to build it, okay, because we don't have enough time. We are just going to run for about maybe 40 minutes to an hour. Okay, so I'm just going to show you different portfolios that you can go into, okay? And then with whatever strategies that you put in, whatever strategies that you have, you decide and you make sure that these strategies that you put in place work for you, right? So that is our objective today. Our objective today is to make sure that everybody is well versed about what a financial portfolio is and how to build a strong one. Because you see, I've realized this one thing, right? During the pandemic, a lot of people are going into the share market. A lot of people are going to cryptocurrencies. A lot of people suddenly are talking about Bitcoins. A lot of people suddenly are talking about how to invest in whatever stocks there is in the market. And people are starting to talk about stocks like automotives, renewable energy, things like, the future techs of the world, right? And apparently they're all doing well. E-commerce businesses and all that kind of things. So today we're going to go through some of it. I'm not going to go through those certain companies with you, but I'm going to go through what are the portfolios that you can actually look at, right? And what are the advantages and what are the disadvantages of all these portfolios, okay? So again, my name is Edmund Chaw, okay, and I'm going to do a live sharing with you today about building a strong financial portfolio. So I just want to say hi to a few people. Hi, Jonathan. I can see Jonathan is watching us. Hi, Rishi. Hi, thanks for joining us today. Kenny Chong. Hi, Kenny. All right. So feel free to share this link out on your Facebook, your own personal pages, or maybe your stories, and invite more people to come in. Because the more people that come in, it's not to say that I'm very good at it, but the more people come in actually gives me some encouragement, right? So at least I can talk faster, I can talk better, and maybe I can perform better for you all. right? Because we are so used to having guests on the show, and I'm alone today, so I might not be able to talk so long, right? So let's share this out to your friends. Hi, Clement. Clement is there also. Thank you for watching. I hope everybody have your dinner. Okay. Hi, Elaine. I'm going to share my screen with you all, and I'm going to go through what are the things that you need to think of, or what are the things that you need to figure out, or what are the things that you need to put in place in order to build a strong financial portfolio. So welcome again to Kingdom Coffee Talk every Wednesday, 8:30. After the session, I'm going to tell you what's going to happen next week, so you can block your calendars and you can stay tuned. If you like this video, if you like this sharing, even after, some of you, your friends might be having their dinner. So even after this whole video, you can actually share it. It will be on our Kingdom Group Facebook page. So look for Kingdom Group MY. Scroll, all our Coffee Talk videos are there. If you can even see previous episodes and previous lives, and maybe some of them might help you. Okay, so let's go straight into the topic, building a strong financial portfolio. Okay. All right, you can see me again there. That is the poster that we share. So feel free to call your friends in, share, and call whoever that, this pandemic, one thing teaches us about this pandemic, right, is that we need to be able to strategize to make sure we can last through the pandemic, right? Because if you notice, right, a lot of people are actually struggling during this pandemic. A lot of people are not doing very well during this pandemic. What is the reason behind it? Okay, let's put businesses aside. Let's put retrenchment aside. Let's put all this aside. Okay, let's look at emergency funds, right? Not many people have enough emergency funds to last through a pandemic or even an economic crisis. So today we're going to run through how to build a strong financial portfolio and how much emergency funds you should have, and what are the different things that we can look at. So let's start. Let's start our sharing now. So where do we start? Right? When you want to look at your own financial portfolio, when you want to plan your own financial portfolio, you need to answer a few questions, right? Because you see, right, a lot of people now, crypto. Let's talk about crypto, right? Crypto has been doing well for the past couple of months, and then it dipped for a little while, right? But during that time when it was doing well, I see some of my friends, okay, putting everything into crypto, right? And then if it do well, it's very good for them, right? But if you don't do well, what happens? So everything is in one basket. All your eggs are in one basket. So it's not a wise decision, right? You are supposed to have a diversification of different portfolios so that you can meet different objectives in life. So first thing first, you need to set an objective. What is the objective? You cannot set an objective saying that, oh, I want a strong financial portfolio because I want more money. No? I want to make more money. That is a very general objective. That is not a proper objective. So what does the objective need to have? It has to have a timeline, right? When do you want to achieve these things? How are you going to achieve it? When do you want to retire, right? And for example, objectives doesn't mean you need only one. You can have a few different objectives, right? For example, me personally, right? I need to save for my future kids' education. So that is an objective, right? And I need to come up with the amount and by when, right? I need to have 300,000 by my first kid, 18 years old, for example. Now he's 9, so I have 9 years left. So I have 9 years to get to 300,000. So that part you already know. Then later on, you need to look at which instrument can get you 300,000 in 9 years, right? So that's an objective. So my other objective that I have is also I want to retire at 45. Okay, that is 7 years down the road. Okay, 7 years down the road. Oh, means I revealed my age. Okay, never mind. That is 7 years down the road, right? So I also need to know how much I need to retire, right? And how many years left for me to retire. And then I will choose what instrument or vehicle, investment vehicle out there that can suit this particular need, right? That is how you plan for your financial objectives. There are a lot of different types of investments and a lot of different types of savings and vehicles out there that you can use to actually help you build your financial freedom. Okay, so another question you got to ask yourself is, what is your risk appetite? Some people, wow, gamble one, they don't care one, right? All in, win, lose, that's it, right? Either I get rich or I die trying. Those type of attitude, there are people like that. Some people just like to keep their money in the bank because it's safe, right? They just want to keep their money in the bank. They don't want to put their money anywhere, right? They don't want to invest anywhere because there are a lot of different factors and risk involved. So different people have different risk appetite, right? I've known friends who, any business idea you give to him, he will think about it and then wow, good, how much you need? Want to invest. Every business also he want to invest one. Okay, so that is also a different type of attitude, right? So you need to know these few things, right? Objective, timeline, and your risk appetite, and what are your capabilities. Why do I say what are your capabilities? Because if you notice, a lot of people, there are so many investments out there, right? And a lot of people want to go into different type of investment, right? Some people, being a financial planner, okay, being a financial planner with AIA Berhad, you come across a lot of different types of people, right? And sometimes when you are proposing a simple medical policy of 200 ringgit a month, right? And that person can tell you things like 200 ringgit, or it's not to say I got no money, but this 200, I rather invest. What are you going to invest in with 200 ringgit? To be very honest, right? So why not you just do something to protect yourself? So that's why I ask, what is your capabilities now? What are your capabilities now? Different people have different capabilities, right? Some people can, invest 300, 400, 500,000 lump sum. Some people can only do monthly investments, small monthly investments. Some can do big monthly investments. So it depends on what are your capabilities now. Oh, now I'm getting a bit nervous because I saw, hi Sean Tong. Sean Tong is one of my sifu, right? I can see him watching. So I'm a bit nervous already now. Hi Cecilia. Hi Jasper. All right. So we'll continue. And what are the options that is available to you? So like I told you just now, I'm not going to tell you what is good and what is not. Okay. I'm just going to tell you basically what are the instruments out there. How does these instruments work? And you have to answer these questions that is on screen now. Answer all these questions, and then later on you decide what do you want to do with your money. That is how we can build a strong financial portfolio. Objectives is very important. Okay, so setting objectives, there are a few examples of how you can set your objectives, right? You can have a few different type of objectives. The main goal is to have a lot of money, correct or not? That is always the main goal. But how to get a lot of money, you must break it down into different types of things, right? These are examples that you can use or examples that you can start off with. Maybe you want to have an emergency fund, right? Some of us have emergency funds, but some of us have already exhausted our emergency funds because of this pandemic, right? We never expected it to be so long. We never expected it to be so bad, right? So emergency funds are very important. So this can be one of your objectives. Pay off your debts can also be another objective. Some people have credit card debts. Some people want to pay off their, even though they took a mortgage of 35 years, they want to pay it off in 10 years, right? So those are considered debts as well, right? Some people buy car, they like to pay off in 2 years. Some people like to drag as long as possible. Got 9 years, put 9 years. Got 20 years, even better, right? Some people are like that, right? So you have to answer it and you have to put it down. Some people want to save for retirement. To be honest, all Malaysians or all human beings actually need to save for retirement, right? But if it's not your objective, it's okay. There is no right and wrong about it, right? Plan for fun, right? Some people like to plan for yearly holidays, right? I want to have one objective that every year I want to go for an international holiday. Some people say it's okay, I only want to go cuti Malaysia. Some people say I only want to go within Asia. So different objectives, right? So what is your objective? Fun can be a lot of other things. Fun can be luxury items, right? In 2 years, I want to save enough to buy a Rolex, for example, right? So that is yours. It's a personal decision. It's a personal choice, right? Invest to make more money. Of course, that can be one of your objectives as well. But of course, you need to put down how much and how long, right? And build passive income. Some people don't believe in passive income. They believe in working their whole life and then retiring with the savings that they have, right? Some people like to retire early and build a strong passive income so that they can retire early and the money keeps coming in. They don't have to save so much because every month there is still input of funds, right? Passive income. What it means by passive income, it has to be a strong passive income means it is above your expenses. Okay, it is far greater than your expenses. If your passive income is lower than your expenses, then how are you going to continue if you don't work, right? So then it's not a proper passive income. So you gotta set it out. Okay, as you can see, there's a note there. Put a SML next to all the objective you have, right? If you have a pen with you or a piece of paper, it's good to run through this exercise. You can do a proper one later, right? But at least whatever comes to mind now, you can write, right? You can write down. If you have any questions, do put it in the comment section. Oh, I can see somebody commented that there's a slight background sound from your side. Yes, I don't know why my laptop's fan is making that chuk, 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 chuk sound. So I don't know why, right? So hopefully you all can hear me clearly. If you all can hear me clearly, please type in the comment box yes, so that I know that my voice is still clear, right? Please put yes in the comment section that the background sound is actually not overpowering my voice, because I'm actually talking quite loud, right? I'm alone in the room and I'm talking quite loud. So I'm afraid my neighbors will come, right? So put a SML next to each objective. What is S, M, and L? S is short term, M is mid term, L is long term, right? So for example, emergency fund can be a short term thing, right? Within 1 year, I must have this emergency fund ready already. Okay? All right. Thanks, Felicia. You can hear me loud and clear. Thanks, Sheikh Jan. Thanks, Jasper, Elaine, right? Thank you for responding. Okay. Retirement. If you are young, then it is a long-term plan, right? If you are 55 already, then I'm really sorry to tell you that retirement is a short-term plan for you, right? So like for me, I think it's a midterm, right? I think it's a midterm plan because I'm going through midlife crisis. All right. So you have to put an SML there so that you are clear when do you want to achieve it. You are clear when do you need it, right? So let's move on. I hope my slides are clear. So what is available in Malaysia? Of course, there is much, 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 much more than this, right? But I'm not going to run through everything with you today. I'm just going to run through these few things that are kononnya famous now, right? These few things are the one that most laymen talk about, right? If you want to talk about investment gurus, then of course they will have a lot of other things that they can talk about. But let's talk about what the laymen talk about and what the things that is available out there for us as normal citizens, right? Rakyat jelata, right? Not high net worth. All right. So stocks and bonds, crypto, EPF and PRS, savings account, unit trust, insurance link. Insurance link doesn't mean your investment link, as is insurance link products. Okay. Property and amanah saham, right? Amanah saham. I think a lot of us actually heard about it before. It is for boomies, and I don't know if some of you all know non-boomies also can, right? So we will go through that later. So these are the 8 things that we are going to look at tonight in this session. Okay. If you want to know more in depth, you can always email me or PM me, and then I'll just tell you how much I charge lah. Okay. No lah. Okay. By the way, so we as financial planners, we know. Okay, we are not experts in it, but we need to know. These are the things that we need to know, and these are the things that we need to understand so that we can help our clients plan better. So I'm using the knowledge that I have as a 14-year financial planner to share this session today. So those of you watching, I believe some of you are actually invited by some of the life planners from our team, right? So if you need help to plan this thing, please reach out to the one that invited you here today. If you just saw it on Facebook, you can go to Kingdom, this current page that you are watching it right now. Reach out to us or send us an email. You can see the thing running below, right? There is our emails there, coffeetalk.kingdomgroupmy@gmail.com. You can reach out to us. If you don't know any of our team members, reach out to us and we will contact you and get in touch to see how we can extend our knowledge and extend our experience to you. Okay, so let's come back to this. What is available out there? So these are the 8 things. So we will go in one by one. Stocks and bonds. Okay, there is a difference. Some people don't know the difference because actually a lot of people think it's the same thing, but actually it's different. Okay, stocks gives you partial ownership of a company because you are buying into the stocks. Right? So it gives you partial ownership. You are not the CEO, but it gives you partial ownership. And it has to appreciate for you to gain profit. Okay? If the value don't appreciate, then you are lucky lah, because it didn't drop. Correct or not? If it appreciate, then it's a bonus. Right? Whereas bonds are actually loan. Okay? For example, I have a company. Okay? Company A, I issue bond means I'm borrowing money from you all. Okay, I'm borrowing money from you all and you all are borrowing money to me. Okay, so I have to pay you a certain amount of interest. Okay, that's why bond interests are normally fixed and it is lower than stocks, because stocks is, I buy already, I make sure that Fleur announce a lot of product, announce a lot of plans for the next few years. Then suddenly the company become very big, very strong. A lot of investors come in and then my stock value go up. I make a lot of money. Right. So different strategies, different way to look at it. So if you can look at the key differences, partial ownership for stocks, bonds, they are loans. Okay. They are actually loans. Okay. The way they structure it, that is actually loans. Okay. Stocks, they pay you in dividends. Okay. Based on the company performance. Bonds, they pay you normally a fixed interest. Okay, because you are taking a loan from them, so they will tell you what is you are giving them a loan, not taking a loan from them. You are giving them a loan. They will tell you, okay, now you give me this amount of money. All right, I'm going to give you every month or every year this amount of interest. Okay, so bonds are loans. All right, so let's look at the risk factor of it. Right, stocks, high risk, high gain. Right. Stocks are very much like gambling, right? There are different types of people go into stocks, right? There are people who go into stocks for long term. There are people who go into stocks for fast gain, right? Those are day traders, right? They look at the computer 24/7. Okay, they have multiple screens at home because they are monitoring the fluctuation of the price, right? So high risk, high gain, right? But if you are buying into blue chips and all that kind of things, you are buying and keeping it, and hopefully 20 years down the road it makes money, then that is a different strategy altogether, right? But these are general things, right? Generally high risk, high gain. Bonds, lower risk, because as I explained just now, bonds are loans. They pay you a fixed interest most of the time, right? Most of the bonds out there are fixed interest, right? And the stocks are actually traded through your central exchange. Like in Malaysia, it's called the KL Stock Exchange, right? Then you can see the Dow Jones and all that kind of things, right? Bonds are traded over the counter. So these are the main difference of these two things. If you can see the sand thing at the side there, there's an S and there's an L there. right? What does S and L stands for? It's the same thing that you have written next to your objective, right? It is short term or long term. So generally, when people go into stocks and bonds, it's either for short term, stocks either for short terms or long term. Seldom people go into mid term one. Okay, seldom mid term one stocks, right? Because they either want to straight away, or I've got news that this company is going to go IPO soon. Okay, so I fast go and apply, right? I got news that this company sending the CEO to the moon, right? Wow, sure, a lot of news, the stock will shoot, then I buy, right? So those are the people that go in for short-term gain, high risk short-term gain. Okay. There are also people who go buy blue chip and all that kind of thing, and they leave it there for 20 years, 30 years. Then it is long term. Seldom is mid-term one, right? It's either short or long, right? For bonds, normally is long term because bonds have a maturity one. Okay, normally bonds will have a maturity, a timeline one. This bond is for how long? Okay, we will return your money at when, the interest is how much. Okay, so normally it is a longer term. Okay, so I hope you guys are clear. If you guys are not clear, please put in the comment section and I will try my best to answer all the questions that you have. Yes, Alvin, is same but different. Yes, it is same but different. Okay, a little bit different, key differences as you can see on screen. Okay, let's look at crypto. Wow, the next best thing now. Everybody is a crypto expert out there. Everybody is talking about crypto. Everybody is investing in crypto. Everybody wants a piece of the crypto returns, right? So what is crypto? Okay, crypto is actually an e-currency, a virtual currency, right? So three key features about crypto is decentralized. Okay, decentralized meaning there is no central authority to it. If you look at Ringgit Malaysia, it is controlled by Bank Negara, right? Then you look at US dollars, you look at Australian dollars, they always have a central bank that controls the currency. Okay, whereas crypto, there is no central authority one. Okay, nobody have a say in crypto one. There is pros and cons to it, right? So you must know it's decentralized. That is one thing. Okay, it's immutable. Immutable means it cannot be undone, right? What means fraud level is actually very low, because the only person that can make transaction is you, right? You are the main key holder. There is no other person that can make the transaction, and everything, all transactions are kept in a log, right? All transactions are kept in the log one, right? And once it's recorded, it's there already. Okay, you cannot undo the transaction. All right, so you get me here. Oh, sorry. Okay, so you get me here, right? Decentralized, and immutable, and limited supply. Okay, why limited supply? Because as you can see, right, currencies, the one that we use on a daily basis, right? Ringgit, dollar, Sing dollar, whatever it is. The central bank can actually print more. The central bank can distribute more, correct? But crypto, no. Once they launch that currency or launch that coin, the supply is, they set means it's set already one, okay? It's all following the algorithm one, okay? You cannot say, wow, a lot of people like this one, I put more, cannot, right? Everything is limited. That's why the price is like that, correct or not? Okay, so crypto is like that, it's limited. So what are the advantages and disadvantages? Very, very high returns potentially. So those of you who actually went into crypto many years ago, 6, 7, 8, even 9 years ago, you should be laughing to your bank now if you kept it, right? So potential very, very high returns. Okay, let's look at advantages first. Protection from payment, like I said, is cannot be undone. And the only person that can make transaction is you as the main key holder, right? Immediate settlement, right? It's very immediate. You can liquidate it straight away, right? Because high demand now, right? High demand now, so you can buy in, buy out anytime, right? Great liquidity. Okay, it's almost the same thing, right? Okay, immediate settlement. Okay, immediate settlement means, immediate settlement means you can perform a transaction immediately. Okay, even across borders. Okay, it is immediate. Okay, it's not like you want to send money to Singapore, or you want to send money to Hong Kong, or you want to send money to China. Sometimes it takes a while, right? Crypto is immediate, right? Straight away. Okay, on the dot. Okay, that is why we come to the disadvantages. Okay, high volatility. Okay, it can give you very good gains, but it can also drop. Okay, very high risk of black market activity because it is, like I said, there is no central authority. There's no governing body that actually governs it. Okay, unregulated. It comes to the next one. Unregulated. That's why you can send money here and there. You can send your is immediate transactions. Okay, and also another thing that you need to look at. Crypto is something either you believe or you don't believe, right? Because there is no basis to it. Okay, there is no fundamentals behind it. One, all right, really, right? Because like when Elon Musk says something, it suddenly go up, right? So there is no basis to it. So it really depends on whether you believe in it and want to invest in it, or you just say no, right? So short term and long term. Why I said short term and long term? Because most of the people are going in for short term, right? Because they buy, they want to see very good returns, and then they sell it, right? Long term is the people that actually, I don't care, I don't care what the price is. I just put it, I buy, I put it there. Because 7 years ago, those fellow who put it there, now they are millionaires, man. So now whatever money I have, I buy first. Hopefully by the time I retire, I should be a millionaire too, right? Because nobody know what is the highest level of crypto. Nobody knows. Okay. Elvin asking a question: what would be better, stock, bonds, or crypto? Honestly speaking, I cannot tell you that, because everybody have different objectives, right? And everybody have different risk appetite. I might think it's good because I'm a high roller, for example, or I'm a gambler. I high risk one, I don't care one. Okay, so to me it's good, but to you it might not be. So you have to answer those questions at the start of the session first. In my opinion, I think if you have extra funds, then okay, right? If you are depending on it to makan nasi one, then better not. Okay, better not. If you have extra funds, it's okay, right? It will give you higher gains than stocks in short term. Okay, in short term. All right. So let's go to, so any more questions? No more questions. We will move on. Okay. Hi, Jules. All right. So after crypto, we have EPF and PRS. Oh, similar characteristics, these two things, and everybody knows is long term because it is retirement focused. Okay, it is really retirement focused. Like you see in our country, those who are employed, you need to contribute to EPF. Those who are businessmen, right? You have a choice whether you want to contribute or not, right? Employers need to contribute as well, right? So the key differences, a lot of people tell you these two same one is the same. They are not entirely wrong, okay? Because it is quite the same, right? EPF and PRS, the main difference is EPF is mandatory. You got no choice. It's by law. Okay? It is by law, by our beloved government, okay, that we have to put it in. Okay, we have to contribute. PRS is voluntary. It's strictly up to you. Your money, your choice. Your retirement as well. So your money, you want to put, you put. You don't want to put, you don't put. Retire time, you got money to eat, your problem. No money to eat, also your problem. Okay, so PRS is strictly up to you, voluntary. Okay, EPF, you cannot choose the funds. PRS, you can choose the funds. There are 4 different types of funds in PRS. Okay, there is your conservative, moderate, high risk, and also your Islamic funds. So there are 4 different types of funds in PRS, and AIA is one of the license holder for PRS. So those of you who do not have PRS, you should have, because I'm going to come to the next point. EPF, oh sorry, terbalik already. EPF is guaranteed minimum 2.5%. Okay, whereas PRS, no guarantee. Okay, is see how the company perform. Okay, EPF, if you all don't know, yeah, it is guaranteed 2.5%. If it goes lower than 2.5, they still have to give you 2.5. If it goes higher than that, then they will give you whatever is higher, right? But it is a regulation that they have to give you a minimum of 2.5% annually, right? So why do I say if you don't have PRS, you need to put in? Ayo, why this one also terbalik again? Okay, tax relief, PRS is 3,000, okay? And your EPF is 4,000, okay? So it's terbalik. For the last 2 points, it's terbalik. Sorry, I must have been tired when I was doing this slide, right? And tax relief, right, is additional tax relief. I believe those of you who are employed now, you would have EPF, right? And most of the time, your 4,000 is used up one, right, for your EPF tax relief. So how to enjoy more? You can put in 3,000 into PRS, okay? How do I look at PRS? Okay, for example, PRS 3,000 tax relief. So when you put 3,000 inside, you already straight away get a tax relief of 3,000 already. Correct or not? Right? So 3,000 tax relief, you look at your tax bracket. Okay, you look at which tax bracket are you in. Then you calculate how much did you save. All right? For example, you save 200 ringgit or 300 ringgit, like easy calculation. Okay, you save 300 ringgit. So 300 ringgit versus the 3,000 you put into PRS. Even before the fund perform, you already made 10%. Correct? Because you saved 300 ringgit. So in a way, that 300 ringgit is already a return to your PRS. So you already made 10% already. So if PRS performed at 5% that year, your fund performed at 5%, you would have made 15%. Because the 10% came from the tax relief savings, right? So you can look at it that way, because money didn't go out, money was kept in your account. It is like early interest given to you, right? Early returns given to you, right? So that is PRS. So think about it, contact your fellow life planners from Kingdom Group. And also, fun fact, EPF investments, if you don't know, 50% is put in fixed income, 40% equity, 5% property, and 5% cash. So that is how EPF divide their investments. Okay, so EPF and PRS, quite straightforward. Most of us know it is long term as well. All right, so moving on, savings and FD. Fixed interest, okay, almost zero risk. Okay, why I say almost zero risk? Because the bank can bankrupt one. Okay, but of course you are protected by PIDM. Like when you hear on radio, right, you always hear the PIDM, the song, right? Na, 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 na. That one is the one that protect your account. Okay, protect your saving account, right? And if you don't know, insurance are also protected by PIDM. Okay, so whatever plans that your life planner asks you to buy is safe one, don't worry. Okay, so let's come back to savings and FD. PIDM, right? Almost zero risk. That's why I said almost. It is not 100%, right? 99%, there's still 1% of risk, right? It is almost zero risk. It's very good for emergency funds. Why is it very good for emergency funds? Because you see point number 4, it is liquid, right? It is liquid cash, right? You just need to go to the ATM, spray the sanitizer first, then only press your PIN number, okay? So it is liquid. So in a way, it is also not a good way to save money because it is liquid. It's too easy to withdraw. It is too easy to change your mind. It is too easy to, I need it first, I put back later, right? So what is a good strategy for savings and FD, right? At the current moment, why I put FD the same category as savings is because the rates are also very low, right? The rates are also very low. It doesn't make sense to keep 500,000 in your FD or 200,000 or even 50,000. That doesn't make sense. Okay, so what is the strategy for your savings and FD? You should have at least 6 months of your monthly income in the account, right? This is the minimum, at least, right? Because this is the standard rule of thumb. If you want to put 1 year to be safer because of this pandemic, you realize actually 6 months not enough, by all means, put 1 year, no problem, right? But don't overput it. If I make 10,000 a month, for example, if my gaji is 10,000, but I saved since I was young, right? And now in my savings account, I got 300,000. It is not a wise choice, okay? It is not a wise choice because you can use so many other vehicles to generate more money for you, right? Let your money work harder, right? Earn more from whatever you have rather than leaving it in the savings account. So 6 months is good. 6 months to a year is good enough, right? Because why 6 months is good enough? Because when things are not doing well, I believe your lifestyle will also decrease, right? Your lifestyle will also lower down a little bit lah. Cannot every time makan hotel lah, correct or not? So if 6 months, once you divide it out, your expenditure gets lower, everything gets lower, it might actually come last you for a year, right? You never know, right? So fun fact, nobody, if you actually think of it, no one actually became rich by saving their money in bank savings account, right? If you can name me somebody, please WhatsApp me, because I tried Googling it, right? And really nobody. Okay, so it tells you one thing, that don't put all your money there. It's a waste of time. Okay, this is definitely long term. All right, so unit trust. Wow, unit trust consultants are really out there now, right? They are like insurance agents. Every time you get a call from them, you don't want to pick up. So after this sharing, still don't pick up their call, but pick up your insurance agent's call, please. Okay, because now it's COVID season. Because if anything happened to you and you call them, they don't pick up, then problem. Okay, so when they call you, you better pick up. Okay, unit trust, unit mutual funds, all the same things. Okay, all the same things. It is a form of collective investment. It is actually the same as stocks and bonds, right? But that one you sendiri bikin, you do it yourself. This one, because I don't have 500,000, how to buy stock? I only got 5,000. So what do? Put into unit trust. Okay, it's a cheap way to get a professional to manage for you. Okay, rich people, they play stock, they got their own remiser, they pay high, very high. Okay, this one is a cheaper option for you to get a professional to manage your funds for you. Okay, so advantages is for smaller investors, people like you and me, or some of you here are very rich watching this show, so I'm sorry. Okay, I'm not saying you lah, me only. Okay, smaller investors, diversification. You have an option to buy different funds with a small capital. Okay, you don't need to, wow, this one's so expensive. One stock is 100,000. How to buy? No need. Okay, you can still buy because they will pool the funds together. Remember I said just now, collective investment, they pool the funds together, and then they, as a company that manages the funds, they go and buy. So your $200, your $2,000 suddenly together with all the one they collect become 2 million. So they can buy. Okay, you cannot buy, they can buy. But your money is also part of it, so you enjoy the returns as well. Professionally managed, like I said, a cheap way to get a professional to manage your money. Okay, variety of funds, so many types of funds for you to choose from tech companies to green companies to eco-friendly companies to companies that send their CEOs to the moon or to space. All these kind of company lah, they like lah. Okay, easy to liquidate as well. Okay, easy to liquidate. Okay, just a note. All the liquidation that I said since the early presentation until now and to later on, I'm talking about if you are still here. I'm not talking about if you die. Okay, if you die, all also hard to liquidate. Okay, to be honest with you. Okay, so this liquidate means you are still here. You make the decision to liquidate. Okay, not that you are not here, somebody want to liquidate. Okay, that one, bonds ke, stock ke, unit trust ke, all also kaput. Okay, the only thing is your EPF, your PRS, and also your insurance-linked products, which we will go there. Okay, disadvantages: load fee, high transaction fee, because every time you switch a fund, you need to pay, right? Every time you want to, hey, I heard that company doing well. You call your unit trust consultant and I want to change to that one, this and that, everything, all you got to pay, right? Everything got to pay. So those are the disadvantages. Generally, more advantages than disadvantage. It is okay to buy unit trust. Okay, not only insurance is the best. Okay, I'm not here to tell you that. It's okay to buy unit trust. Unit trust is also quite dependable one, right? Long term, when the dollar cost average out everything, you will still make money in the long run. So try to put it mid-term or long-term, right? Try not to use unit trust as a short-term vehicle, right? Because it's not to say that it doesn't make money for you, it does, but it is better to be long-term because it is also stock. So the volatility is also there, right? If you plan it for short-term, what if suddenly when you need the money that time is not performing, right? So always plan it for mid-term and long-term. All right. So this is unit trust. Property. Oh, property. Something that some people like, some people don't like. Okay. I don't have to explain about property. I just show you some of the advantages and disadvantage. Advantages: stability. Yes, it's very stable. It will not come down, right? Bukit Beruntung, the property 30 years ago, 20 years ago there, it is still there. It's just that the price is no more there lah, but the property is still there. So it's very stable. Okay, capital growth, potential rental income. At this current climate, I think this potential rental income is not really relevant to all properties lah. It is quite only certain properties, because most of the time now, the property that you buy, rental income, it is lower than your installment, right? Your rental. Okay, various tax deduction. Yes, you can enjoy a lot of different types of tax deduction. Developers also give you a lot of discounts. So these are some of the advantages. Okay, the disadvantage: it is expensive to maintain, right? Why I say expensive to maintain is because whether somebody rent it or not, right? You have a lot of different, like your quick rent, okay. Then after the flood, don't want to rent already, you need to go in and wow, the fan spoiled, wow, the aircon spoiled, the kitchen cabinet, where's the door? The door also hilang already, those kind of things. So you have to have a amount of money set aside for all these emergencies and to maintain. Okay, or tenant call you, boss, the gate, the auto gate spoiled. I never do anything. I never used before the auto gate. I stay here 3 years. I never used before. I don't know why it's spoiled. How you want to argue? You cannot argue. So you got to fix also, right? Expensive to maintain law. So not flexible. Yes, it is not flexible. You cannot bring your house here and there, right? The property is there means it's there already. Bukit Beruntung Flats that bought 20 years ago, right? Very good. Wow, very good. Very cheap. Why they buy? Because government said the airport gonna be that side. So everybody rush there and buy. Then suddenly the airport, they shift to Sepang. So Bukit Beruntung, they cannot, like that. Then we take the house, put in Sepang lah. Cannot lah, bro. Correct? Not your house there means there. So you have to bear the consequences. Hard to liquidate. They want to sell also cannot sell. Okay, the Bukit Beruntung Flats, they cannot sell also because nobody want, right? And half the time now is either old folks home, children home, or empty lot with all the grass up there one. Okay, if not MCO, you take a drive down to Bukit Beruntung, you have a look. Okay, high entry and exit costs. When you want to buy, you need to take out money. Okay, 10%. Then plus all your stamp duty, lawyer fee, right? When you want to sell, also the same thing. Okay, when you want to rent, also you need tenancy agreement. So high entry and exit costs, right? You cannot just say, okay, I take out 200 ringgit, but every month I will pay lah. But I just want to take out 200 ringgit first. Cannot, right? You have to follow the market value. How much you are buying it? 10%. Some people 20%, some people 30%. Okay, so high entry and exit costs. Potential loss of value. Yes, like what Jasper said in the comment, property price also might lower than the time we bought. Yeah, generally now, I think 60% of the properties in Malaysia is like that lah. sad to say lah. Okay, I'm also affected, so I'm so very sad. Okay, so potential property loss, value loss, and relies on too many factors. It relies on factors like I said, Bukit Beruntung. You know, that time they say the airport is going to be there. Everybody buys. Suddenly, the PM never changed. I still don't know why suddenly changed the decision. If change PM, another floor decide different thing, I understand. The same floor deciding different things. Okay, so yeah, so that is also one factor, right? So there's a lot of factors that will affect the market, right? But one thing about property, right? If you guys believe in property, yes, go ahead, right? One thing, if you realize, property always follow the airport and the port, right? Pelabuhan and lapangan terbang, correct or not? So if you can see, the properties are moving towards Putra Heights, Saujana Putra, all because going towards the airport, right? Then you can see Kota Kemuning, that side all is moving towards the Westport, our Pelabuhan, correct or not? Then you see Klang, or because towards what is that? The Pelabuhan Klang. So townships and properties generally follows that. So if suddenly somebody say they are going to build another airport somewhere and they're going to move KLIA to there, then faster go and buy. Okay, so like you see, Ara Damansara is quite new, but before Ara Damansara, you can see Subang Jaya, Damansara, all it started because of Subang Airport as well, right? So if you notice the trend, it always follows that. So if you got Angin one, you got News one, let me know also, all right, and it's always long term. Generally, it's long term, but some people keep it for short term. They want to flip the property one, right? They buy first. After 5 years, 10 years, pop, they sell. When the price go up a little bit, they sell. So generally, mid-term and long-term. So these are the things you need to consider when you want to go into property. Okay, ASB, ASM. ASB is Amanah Saham Bumi Putra, right? ASM is Amanah Saham Malaysia, right? Amanah Saham Malaysia, ASM is for us, non-Bumi. Okay, ASB is for Bumi. So these are only the two difference. Okay, it's a unit trust fund. Okay, that has a fixed price of ringgit Malaysia 1 per unit. Okay, but there is also a limitation to it. Maximum is 200 unit, means 200,000. Okay, all right. Advantages: no upfront fees, low management fees, quite consistent returns. I would say ASB actually performed quite well throughout the years. Okay, and easy to liquidate. Right, very easy. You want to take out your money, take out lah. You want to sell lah. Right. So if you are non-Bumi, you can also consider this. ASM is also for non-Bumi. Don't get confused. Like some people say, I are not for B1 lah, ASB, that one for Bumi Putra ma. It's not for us ma. No, we have also ASM. But generally, ASM's returns are slightly lower than ASB. Okay, if you look at, you can Google this afterwards. If you look at the history or the track record. Okay, and it's generally long term. All these are all savings. It is also considered savings. It is long term, right? Because the returns are so good. Not to say so good, it is performing better than a lot of instruments out there. So normally people put their 200,000 there and they leave it there, right? And they leave it there for maybe 5 years, 10 years, 20 years, or when they really need the money. Okay, and then when they have extra 200,000, they put it there again. Okay, so this is ASB and ASM. All right. Now we come to insurance-linked products. Insurance company not only offers protection and medical card and all these kind of things. We have investments too, right? Insurance companies offers a variety, different types of products. I would say one of the most holistic company is insurance companies. Okay, one of the companies that provides the most thing for you. Okay, that's why you can see the sand thing down there on the bottom right of your screen is short term also got, mid term also got, long term also got. So it depends on what term you want. Okay, so insurance company have everything, right? Advantages, wide range of products, mid term and long term objectives also no problem. Low to no cost. Okay, low to no cost meaning, of course, you want to save the money that you need to save, that one you have to save lah, right? But there is no additional cost to it one. Almost zero. Okay, because like your fund switching, everything is no cost. You can switch as many times as you want. Today you call your life planner, right? Your AIA life planner. Hey, I don't like this fund. I want to change. Suddenly 1 week after that, hey, this fund, I think I want equity. You can change anytime, no cost. Okay, mid to high returns, flexible and easy to liquidate, and is creditor proof. Okay, easy to liquidate. You can surrender anytime. You can withdraw your money anytime. Okay, it will be in your bank account within the next few days. Easy to liquidate, and creditor proof. Okay, everything that I mentioned just now there, only EPF, and this is creditor proof. Okay, this is when you mati. Okay, and the fastest form of cash when you pass away. Okay, the fastest form of cash that will be given to your family is insurance-linked products. Okay, so when you are doing your planning that time, do include insurance-linked products into it. Right? Although I can tell you that we might not perform as well as your stock market and your crypto. Definitely might not perform as well as what they can give you. But if you compare us with your unit trust, we are there. We are either on par or better than them. If you compare to your FD and savings, you don't even want to talk about them, right? So it's actually quite a good range of products that's offered. Like you can see also on your screen, you look at the returns, equities, our highest return was 43.37%, 1st Jan to 31st December. For 1 year, performed 43%. This is really fantastic, very fantastic results, right? Which I think if you put your money in FD, you retire, also you don't have 43%, right? Okay, so diversify, look at all the different strategies that you have. So I believe with that, I'm done with this 8 available range of vehicles that you can use for building your own financial portfolio, right? So just now you already set your objectives, you already write what you want to achieve, all these kind of things, right? And I've run through all this with you. It's time for you to look at different portfolios and different instruments that can help you. So before I'm not going to end the session now, don't worry. Okay, before that, I'm going to show you income level guide as well. Okay, income level guide. If you want to go into stocks and bonds, normally it's recommended for high or mid range earners. Okay, high or mid range earners. Crypto also high or mid. Like I said just now, if you have extra money, by all means, right? But if you are waiting for that money to buy nasi lemak one, then don't lah, right? Don't. Okay, EPF and PRS, high, mid, or low, also you can go into, because it is a form of retirement savings as well. Okay, your financial portfolio can be a mixture of 3, 4, 5, or even all of these items, right? Even all of these items, it is totally up to you and the objectives that you want to set, because different objectives have different timelines, right? And different amount that you want to achieve, right? So your savings account, mid and low income level, can go into savings account, Amanah Saham as well. Property, normally you will, because just now I said entry and exit cost is quite high, so you will at least need to be at least high income lah. Okay, I'm not talking about the house that you are staying. I'm talking about your number 2, your number 3, your number 4 house. Okay, so insurance-linked products, since there are so many products that is offered by insurance companies, AIA per se, any income level you can come in. We have people that that save hundreds of thousands to millions with AIA. We have people who save a mere 100 ringgit a month. Okay, so no problems. Any objective that you have, sit down with the person that actually invited you here, or sit down with any life planners and talk to them, right? We are not experts, but we can help, because we need to have knowledge like this, right? Unit trust, mid-level to low level, because the high level first will go for the stocks and do it themselves, right? So mid and high level. So you look at the income level and you think, what income level are you at, right? Then you mix and match to build a strong financial portfolio. If you need help, always call us. Okay, The rule of thumb, if you are not sure, like that, what funds should I choose, or should I go into, or if this is the thing, should I go into more high risk, okay, because I think I like also a bit high risk. So follow the rule of thumb, okay. There is this thing called the investors rule of thumb. This is mainly for stocks and bonds, okay, but generally you can use it across your whole financial portfolio, okay. The rule of 120 is you take 120 minus your current age, okay. The whatever number come out, that is your high risk percentage. So for example, if you are 40 years old and you take 120 minus 40, you get 80, right? So in your financial portfolio, 80% must be high risk, okay. 80% must be high risk, 20% fixed income or bond products, lower risk products, okay. Your savings account, your EPF, your PRS, it can be those as well, right? So this is the rule of thumb, because the younger you are, the longer time you have, right? That is why when you put your money in high risk products, you can take the time to average it out. It doesn't mean, okay, these 2 years drop are very bad. Doesn't matter. I still got 20 years to go for it to average it out and even make more money. Okay, so that is the general rule of thumb. Okay, so if you have any questions, please put it in the comment section so that I can answer them, or I can help you understand. Or maybe if you have something to add on to what I say, put it there as well. Like I said, I'm not an expert, right? So maybe if you have some better ideas, please put it in, then we can all learn together. But if you don't know how to manage your money, I would suggest don't talk about investment first. Learn how to manage your money first. Okay, this is just an idea for you to start off with. Okay, this is the money jar, right? The money jar is very famous. This money jar concept. 55% of your income must go into your needs. Okay, your regular monthly needs, your food and all that kind of things. 10% go into luxury and lifestyle, right? You want to go watch movie, you want to buy your Apple Watch, all those must be taken from here lah, right? If this jar tak cukup, then wait until enough only go long. Okay, then 10% for financial freedom. Financial freedom means this 10% must go into something that can help you build passive income. Okay, that can help you build passive income for your financial freedom. Okay, 10% goes into education and self-improvement. Some of you here are professionals, right? You need to go for courses. Like for us, life planners, we need to always upgrade our knowledge with the current trends. That's one thing. With also financial knowledge, right? Because the rules change, like Distribution Act and all that kind of thing change. So we need to attend courses, right? Doing sales, sometimes you get very sad. When you get very sad, you need to pay money to motivate yourself as well. So all these are education and self-improvement. 10% for long-term investments. Long-term investments can be for your retirement, those type. Okay, and 5% for charity and to give. Okay, charity, it can be for your zakat. Okay, for those Christians listening in, it can be for your church monthly tithes. So it can be 5% that you put aside for your income tax, right? So you put it aside first every month. Not only when you wait next year, when you need to file, that time only your heart pounding where to get the money. No, you can put it aside every month as well. So these are just guides for you, okay? Your luxury, financial freedom. You can say, well, hey, I also don't buy luxury item one. I still using the Nokia 3310. I don't need iPhone. Then you don't need this jar, right? Then you rename the jar to something else. Okay, you can rename the jar to something else, no problem. Okay, these are just guidelines for you. Okay, financial freedom. Some people say, I don't mind. If I don't work, then I do what? I don't care. I want to work until 80 years old. Then take away this jar. Okay, put it into something else. Name it something else. Right? So different people, different objectives. Okay, so this is just an idea for you to start off with. Okay, and then another thing is very important is you need to identify where are you at. Okay, you really need to identify at which stage are you at currently. Okay, are you at you want to invest but you satu insurance pun tak ada, then cannot lah, right? Because the first step is always to protect your wealth first, protect yourself. protect yourself against risk, because you are the money making machine. Correct? You are the goose that lay the golden egg. So you have to be protected, right? And then after the protection is okay, right? Settle ready, then you move into savings. Do you have your 6 months in your bank account? 6 months emergency funds? Do you have that? Right? Do you have maybe 10% put aside every month for your retirement? Do you have that? You might not achieve your goal yet, but every month you are putting 10%. You have to set aside first. If you already start doing all these things already, then we look into investment. Some people protection also don't have. Medical card also don't have. Okay? In the bank, only got $2. But the fellow tell me the fellow want an investment. I also don't know what to say, right? So ask yourself, which level are you? All these are very personal, okay? You can lie to your life planner, you can lie to your unit trust consultant, you can lie to your remiser, but you cannot lie to yourself, right? At the end of the day, when you retire, you are the one that's going to be suffering, okay? So answer your objective questions in the start of the sharing just now, and all these questions. Look at yourself. That is the most important thing about financial planning, right? If you don't know yourself well, no matter how you plan, it's not going to work. Okay, so these are the things that you need to look at. If you want to know more, please reach out to your life planners or the people that invited you here today. We will connect with you and see how we can help. Or maybe you have some ideas, or maybe you have something you want to share on Coffeetalk. Do email us, no problem. This is a platform that we want to add value to people. It's not a platform that only we can talk, you cannot talk. No. Okay. So do contact us. All right. So I'm done with building a strong financial portfolio. I hope it added value to you. I hope it helped you, understand how to start a plan. Okay? Not to say how to plan, but how to start a plan to have a strong financial portfolio. Now everybody is working from home. Now everybody is actually not too busy, right? Work from home. So it's a good time to take out all your policies, to take out all your investment and everything. Put it down, write it down, and start planning, right? It's never too late to change your strategies, right? It's never too late, right? So now is a good time. If you don't know how to do it, you take out everything, you ask somebody to help you do it, right? Because at the end of the day, you benefit from it, okay? Not other people benefit, okay? So please do drop your email, drop us an email, or even talk to the person that invited you here today. So I hope I added value to you. I'm Edmund Chaw. Okay, before I end this session, please remember that Coffeetalk happens every single Wednesday, 8:30 p.m. here, right? Kingdom Group MY. Okay, so before the Coffeetalk happens, we actually post a poster one. Okay, we actually post a poster like the one you saw, my face. Okay, so what you can do is you can share that poster first to let your friends know that it's happening. You know, you say, hey, last week I heard Edmund, very good the flow. I tell you, whoa, fantastic. I think everybody should join. Then they will join, correct or not? Then they will eat their dinner earlier, then they will join. Okay, so next week is not going to be me. I'm going to tell you what's happening next week. Okay, we in Kingdom Group, we actually have a charity event every single year one. Okay, so this year, because due to the pandemic, we couldn't do a charity event. Okay, last year we actually visited a children's home. Okay, this year we can't do that. So what we are doing this year is we are gonna do a food bank, right? We are going to give out 100 sets of food. Okay, that per set it will consist of your beras lah, your canned food lah, your Maggi mee noodles lah, all that cooking oil lah. That is one set. Okay, and we are giving out 100 sets. Okay, we will communicate it to your as soon as we can within these few days, so that if you have the urge in you that you want to help out as well, please do donate, because we will do the buying of the brass and all, no problem. You know, we have a committee set up already. We will do that. Do donate. We will send you the link. It is all transparent. How much you donate, everything is going to be transparent. Don't worry about it. 20 ringgit, 10 ringgit, also no problem, right? I'm not going to talk much about it because next week, please invite all your friends to listen, because next week is the call to action, right? We will tell you the details of the project gratitude that we are doing. Kita jaga kita. Okay, next week we are going to talk to you about that. And next week you will be able to hear all the details from our project lead, Rishi Punaya, right? Rishi will be our project lead and he will be handling the whole logistics together with his team. Okay, and you can see John Leong is his project co-lead, right? We have a committee that will be running this. And next week, please do, because as Malaysians, we need to help each other during these times of need. Okay, and we are committed to do the food bank already. Now all we need is the support from everyone. We also need the donations from everyone as well. Our minimum is 100 sets. Okay, even if we don't achieve the amount of donation, we will still provide 100 sets. But what we want is we want to be able to collect enough to provide 300 sets, 400 sets. Then that is significant, right? So do our part, do your part. And next week, listen to Rishi and John. They will be hosted by none other than Elaine Ng. Okay, she will host both of them, and they will be telling you all about this event. All right, so I'll see you next week. Thanks for joining me. I hope that you enjoy my session. If you enjoy, please give me some words of encouragement in the comment section. Okay. I hope you have a better idea on building your own financial portfolio, and I will see you next week lah. I think next Wednesday, same time, same place. So don't go anywhere. After dinner, straight away on your laptop or your iPhone or your iPad ready lah, right? And get ready, because we will be seeing you next week. All right. So thank you very much. With that, I'm Edmund Chaw again, and this is Kingdom Coffee Talk, and I'm going to leave you to your supper. Okay, good night. See you. Bye.